Did you know? Even developed countries like USA, Australia, and China don't have a developed national power transmission grid like in India, an essential infrastructure required for new energy transmission. And did you know India, with its economical advantage in green energy, is seen as the potential Saudi Arabia of new energy? Did you also know the National Thermal Power Corporation, or NTPC, has a vision that their new energy portfolio will be equal to thermal energy by 2032? Hello everyone, and welcome to this presentation on SBI Energy Opportunities Fund. In this presentation, we will share insights on why the Indian energy theme is a multi-decade Atmanirbhar growth story and the available investment opportunities in the segment. To start with, here are some key points that highlight why Indian energy theme is a multi-decade structural growth story. We are currently at a sweet spot where we believe money can be made in traditional energy companies as well as from new energy plays. We will look at these points in detail in the coming slides. As you can see from the chart on the left, India is the only market that will witness growth over the next 3 decades. The share of renewable energy will be more than tripled by 2050, as seen from chart on the right. With this, the full value chain from green energy generation to consumption, the domestic businesses will be benefited. Further, India energy consumption has been significantly lower as compared to other developing economies. With infrastructure push and Make in India campaign, manufacturing will pick up in India, and energy consumption is expected to pick up simultaneously. We are witnessing significant government policy support across the traditional energy segments. Supportive policy environment and improved efficiency in the system is leading to increase in profitability for traditional energy companies. As we move towards higher energy generation domestically, these policies will become an enabler for valuing re-rating in the sector. On the new energy side, India is taking the lead and has committed to be net zero, which is a target of completely negating the amount of greenhouse gases produced by 2070. There have been several government initiatives to achieve this target, and India has increased the target of achieving non-fossil fuel-based energy from 300 gigawatts to 500 gigawatts by 2030. India's steps towards higher adoption of green energy is already visible. As can be seen in the charts, new capacity addition in energy segment is primarily in renewable energy segment, resulting in a rise in share of renewable energy in total energy generation. India is leading on the Climate Change Performance Index among G20 countries. For instance, the Solar Alliance and Bioenergy Alliance was floated by India and signed in India. India's advantage on green energy side will help in reducing reliance on China, which currently has around 85% of solar value chain and 50% of hydrogen value chain, which is essential for global energy diversity and security. Weight of oil and gas X of RIL and utilities in the broader market index has reduced over the year. This is because a large part of profit pool is not being captured in India due to higher imports. However, going forward with reforms and incremental development in new energy segments, we expect energy imports to fall, thus leading to improved profit pool for Indian companies. While we talk about the new energy segment growing in the coming years, here is an example of how big is the growth potential for the sector. As you can see, one international company is 4.6x of the entire Nifty Energy Index. India, with its advantage on green energy side, has the potential to be the Saudi Arabia of new energy. Looking at the past performance of the index, the energy index has outperformed Nifty 50 across time periods. This is because major players in the sector have been able to innovate and generate higher profitability. Despite the outperformance, the valuations for the sector are fairly reasonable to the broader market index. With this backdrop, let us now look at one example each of the opportunities available in the traditional and new energy segment. In terms of traditional energy segment, we believe that companies within the gas sector look interesting. Gas consumption has not picked up since the last 12 years due to lack of proper infrastructure, lower production, and rise in global gas prices. However, as can be seen from the chart on the left, a lot of capex and policy improvements have happened over the years, resulting in higher gas production, better realization, and improved gas grid connectivity. These factors are expected to result in higher gas consumption in the coming years. On the new energy side, as discussed earlier, India has an added advantage in green energy generation. We are among the cheapest solar and wind power producers in the world. Lower cost along with the benefit of solar and wind peaking at different times of the day and availability of hydropower provides India round-the-clock supply of green energy. Competitive pricing along with a developed national grid are favorable for growth and adoption of green energy in India. Presenting the SBI Energy Opportunities Fund, an open-ended equity scheme following the energy theme. SBI Energy Opportunities Fund is a pure-play energy theme and aims to capture the opportunities available in the full energy value chain. The fund will invest in companies engaged in activities such as exploration, production, distribution, transportation, and processing of traditional and new energy. In terms of portfolio construction, the fund will follow a barbell approach, which means that the fund will invest in a mix of both traditional and new energy companies. Given the factors highlighted in the chart, an optimal mix of traditional and new energy and power utility companies can help in reducing the return volatility and offer better risk-adjusted returns. Do take a look at the details of this fund. To conclude, the Indian energy segment is witnessing significant developments, and we are at a sweet spot where both traditional and new energy segments offer good investment opportunities for you as an investor. Thank you, and we look forward to your investment in this fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.